most retirees think they know where they stand financially until they see the actual data. Because when the Federal Reserve breaks households into 7 levels of wealth, almost nobody guesses their level correctly, and that's when retirement decisions start to go sideways. I'm Stephen Neely, a retirement planner and wealth advisor, and a big part of what I do is help people understand where they really sit on the spectrum. Not the level they feel like they're in, but the level the numbers actually put them in. And when those two don't match, that's when people overspend, take the wrong risks, or keep working years longer than they actually need to. Today, we're going to walk through the real 7 levels of retirement wealth. These come from the Federal Reserve data, spending patterns from the Bureau of Labor Statistics, as well as retirement income research from Boston College. And as we go through each level, I'll explain what life actually looks like in that range, the planning mistakes people tend to make, and what matters most if you want to move up a level or simply maintain the level you're in. If you're in your 50s or 60s, you've probably seen charts online about various levels of wealth. The problem is that most of those are completely made up, and meaning they're not tied to any real data, real retirees, or real spending behavior. So in today's video, we're going to fix that by showing you what retirement really looks like at different wealth levels, what changes, what doesn't, and how to think about your own situation in a way that actually leads to a stronger plan. Because your level of wealth doesn't just determine how comfortable you retire, it determines the tax planning you need, the risks you can safely take, the income strategy that makes sense for you, and how much flexibility you really have. So let's get into the video. Level 1 is what I call the financially vulnerable group. This is anyone entering retirement with under about $250,000 in total net worth. According to the Federal Reserve's survey of consumer finances, that's roughly the bottom half of the wealth distribution for people in their late 50s and early 60s. And so we're going to keep coming back to this Federal Reserve data on these different levels of wealth for people in their 50s and 60s. So keep that in mind. It's not for anybody. It's those specific groups. So now, for our purposes, why does this matter? Well, one reason, and I'll cite the Bureau of Labor Statistics here, where they show that the average retired household spends about $42,000 to $50,000 a year. Social Security covers a big chunk of that, but not all of it. So if you're in this group, almost all of your retirement lifestyle depends on Social Security or maybe even other government programs, and you're exposed to unpredictable costs like healthcare inflation. If we look at Boston College's National Retirement Risk Index, it consistently shows that this group has the highest probability of falling short in retirement, which you probably don't need a PhD to come to that conclusion, right? But the question really is, what do you actually do if you're in this level? Well, the focus here becomes reducing fixed expenses, delaying Social Security if possible, and protecting yourself from big shocks. You're trying to avoid fragility because every decision, ultimately, it needs to lower risk and not increase it. And look, I've seen this play out with real people at this level of wealth just through pro bono work that I do. And I often see they start retirement thinking they can pull, $1,000 or $2,000 a month from a small IRA, and it just doesn't work. The math forces them to rethink everything, and the earlier you realize it, the better your outcome is. And honestly, if you are already in your 60s and you hardly have any money in a retirement account, I know that you don't want to hear this advice because, look, a lot of jobs aren't the greatest, and you probably want to retire as soon as you can, but the reality is you should probably work as long as you possibly can and almost certainly delay Social Security while you're doing that so you can increase your check to the highest level possible. Now, as we move on to level 2, things do start to stabilize a bit. You're still not in the comfort zone, but the risk of everything falling apart starts to come down once you cross that $250,000 net worth mark. This group we'll call Basic Stability Group, and this is anyone with roughly $250,000 to $500,000 of total net worth heading into retirement. According to the Federal Reserve data we mentioned earlier, you're no longer in the danger zone. You've got some financial footing under you, and this is going to put you in the 50th to 65th percentile for people in their late 50s and early 60s. You actually have a little bit more financial flexibility since you're not relying 100% on a single income source anymore. And at this level, you've got Social Security, you've got a little bit of savings, and you've got some options then, right? Not a ton of options, but enough that your retirement isn't hanging by a thread. A Boston College paper called How Much to Save for a Secure Retirement talks about households in this band as being borderline secure, meaning it can work, but you don't have a ton of room for missteps. A couple of bad decisions here could knock the whole thing off balance. But, what do you actually do at this level? Well, if you're in this level, I think you need to focus on structure. You want to build a very clear understanding of your spending. You need to time your Social Security correctly, and you have to set a withdrawal rate that doesn't assume the market is going to come to your rescue every year. And so, at this level, planning really starts to matter. You can retire, but you have to manage it thoughtfully. Now we move to level 3, and this is where things do start to feel a little bit different. Once you go beyond that $500,000 mark, you start crossing into a zone where retirement becomes more comfortable. Not luxurious, but comfortable in a way you're not questioning every single decision. This is the wealth level we'll call the comfortable middle, and it's anyone with roughly $500,000 to $1.5 million in net worth going into retirement. The Federal Reserve data indicates that you would be in the 65th to 80th percentile for your age group, for this level of wealth. So you're well above average at this point, and I think it's, finally starts to feel like it. You're certainly not wealthy, but you do have choices, and, that's going to make your retirement feel more comfortable. What stands out here is how retirees in this range use their money. You're no longer stretching every dollar. You're not worried that one unexpected expense is going to derail everything. You can absorb some surprises without blowing up your entire plan, and that psychological difference alone is huge. So what does this level look like for people? Well, first, it means that your fixed expenses are generally covered without a lot of stress. You can travel a bit now. You could replace a car when you need to, help kids here and there, and you're not going to feel so guilty about spending money. You still need a withdrawal strategy. You're obviously not in unlimited money territory, but you're not white knuckling every choice either. It's at this level where you start to make decisions based on what you want and not just what you can afford. And I tell you, having worked with a lot of retirees in this age range, the ones who really thrive here, they share something in common, and it's that they stay grounded. They don't suddenly upgrade their lifestyle just because they crossed the $1 million mark, for instance. They pick a spending level that fits with their plan and they stick to it. That discipline is what keeps this comfort level intact for decades. Now, as we move to level 4, things start to shift again, this time from comfort to flexibility. And, it's here where retirement starts to open up in a way that feels very different from the first 3 levels. But before we get to level 4, however, I want to mention, if you want real clarity on how your own level of wealth fits into your retirement and what it might mean for your taxes and your income plan and strategy and all of that good stuff, click the link in the description. You can answer a few quick questions, and I'll review your information and show you the areas that matter most for your plan. Now, back to our video and level 4, and level 4 is what we call the flexible freedom group. This is anyone entering retirement with roughly $1.5 to $3 million in total net worth. Back to the Federal Reserve data, this would put you somewhere in the 80th to 90th percentile of wealth for that age group. And at this point, it's where retirement stops feeling like a constraint and starts feeling more like a choice. You're not just covering basics anymore. You have real flexibility, including flexibility on when to retire, meaning you can probably retire earlier than, well, certainly you could retire earlier than the people in the first 3 groups, right? The retirement research consistently shows that once households reach this range, the probability of running short in retirement drops dramatically. And, not just because you're quote unquote rich, but, your margin for error is so much wider. A bad year in the stock market isn't going to change your life. A healthcare event isn't likely to wipe out your plan, right? You've got some room to absorb shocks here. So what does that mean for people in this group? Well, it means that you can maintain your lifestyle. You can travel more freely. You can take on projects you enjoy, help family when needed, and you can still feel confident about the long-term stability of your plan. In other words, you're not debating every expense anymore because you're no longer worried that a single decision is going to break your retirement plan. And look, that's a sense of ease that simply doesn't exist in the first 3 levels. And, my experience in working with people in this level of wealth, what really stands out to me is the ones who thrive are the ones who don't confuse flexibility with unlimited resources, which, some people might be tempted to do at this level of wealth, right? So the successful ones enjoy their money, but they still keep a framework in place, still monitor their withdrawal rate, they make intentional decisions, and they stay aligned with their long-term goals. It's the combination of discipline and flexibility, that's what turns this level into a comfortable retirement for them. Now, as we move on to level 5, this is where things, of course, shift again. And this time they shift from flexibility into independence. That's the level of wealth where you're no longer asking, do I have enough? And you start asking much bigger questions about legacy and taxes and long-term strategy. Level 5 is what we'll call the independent wealth group. This is anyone entering retirement with roughly $3 million to about $10 million in total net worth. According to the Federal Reserve data, that's going to put you in the 90th to 97th percentile. This is the point where retirement feels fundamentally different for people. You're not just flexible anymore, you're truly independent here. You have the ability to make decisions without worrying about whether they're going to break the plan. Retirement research on this level shows that households in this range rely far less on Social Security and far more on portfolio income, real estate, business liquidity, and things like that. Your lifestyle isn't being dictated by a single income stream, and because of that, you have the ability to absorb volatility and still maintain your quality of life. So, what does this level actually look like for people? Well, it means you're not just maintaining your lifestyle, you're actually, actively shaping it. Here, you can start to travel when you want. You can fund experiences with family. You can pay for big home improvements or gift money to kids and grandkids without throwing off long-term projections. You have more insulation from market swings, right? You have more room to take calculated risks, and you generally just have enough assets to fund things like long-term care without relying on insurance or government programs. And, here's what I notice about retirees in this range. The ones who handle this level well don't treat it like a blank check because you're still not quite in that next level, right? They still plan, they still make thoughtful decisions, they think about taxes, because honestly, taxes are one of the biggest risks at this level. They think about legacy and they start to ask bigger questions about, what their wealth is really for. And they do all of that while still enjoying the independence they worked hard to build. Now, moving on to level 6, this is where things shift again, this time from independence into true affluence. Level 6 is what I call the multi-generational wealth level. This is anyone entering retirement with roughly 10 million to 30 million in total net worth. Going back to that Federal Reserve data, that's going to put you in the 97th to 99th percentile of wealth. And this is where the entire conversation around retirement shifts. You're no longer planning for your lifetime, you're planning for your family's lifetime. Your wealth is large enough that it outlives you by default, unless, well, let's be honest, you're a complete a-hole or just a moron. Maybe both. But outside of that, you really have to work hard to really screw this up once you have that level of wealth. And research on higher wealth households shows that once you cross this threshold, your biggest challenges aren't market returns anymore. They're going to be things like structure, you've got taxes, trusts start to become a big deal, liquidity management, charitable goals, succession planning, trying to avoid estate taxes, all of that good stuff. That largely determines whether your wealth actually survives you or disappears in one generation. The retirement math is easy at this level. It's the strategy that gets complicated. So if we want to look at, what does having this level of wealth look like? Well, look, your lifestyle is fully secure. You can travel when you want. You can maintain multiple homes here, which I think is different than in the other levels. It's far easier to have, 2 or 3 residences. Now you can support children and grandchildren. You can fund large projects, and you can give charitably and still maintain long-term stability. You don't really worry a lot about market volatility so much. And what distinguishes folks in this level is how they approach their wealth with intention. They really think in terms of outcomes, right? What do we want this money to accomplish? Who is it for? How do we communicate expectations to the next generation? They put guardrails in place, but they also enjoy their money. It becomes a balance between stewardship and lifestyle. Now, level 7 is where things shift one last time. We'd all love to be in this level if we could. Level 7 is the ultra high net worth category, and once you cross into that range, you're operating in a completely different financial world, planning challenges that look more like a family office, rather than a retirement plan. This is anyone entering retirement with roughly $30 million or more in total net worth. The Federal Reserve data says this puts you in the top fraction of the top 1%. So, the tail end of the wealth distribution. And of course, at this level, your financial world looks nothing like the first 6 levels. You're probably operating a small family office, or maybe even a large family office just for your wealth. Once you cross into this range, challenges aren't about income or withdrawals or market volatility. None of that really moves the needle for you. Here, the real issues become governance, control, taxes, entity structure. You're setting up things like family limited liability partnerships and all of that stuff to avoid estate taxes. You tend to care a lot about philanthropy and intergenerational expectations. What does life actually look like here? Well, as you can probably imagine, life is good at this level. You're flying private. You maintain multiple properties across the country and probably across the globe. You can fund major charitable initiatives, going to set up trust for your children and grandchildren, and you still have substantial flexibility for decades. This is where you get into yacht money. At the extreme end, you might even be able to buy a yacht simply to haul your water toys around while following your main yacht, just like Jeff Bezos. You probably invest in art and expensive wines. You may even be able to hire Beyoncé to sing at your private birthday party. Your biggest concern in life is probably figuring out how to gain access to things that other wealthy people don't have access to, which is why you might pay $7 million to buy an art installation of a banana taped to a wall. You can do a lot of cool things. So that's the top tier. And look, guys, honestly, if you're in level 7, get a hold of me. I would love to hang out on your yacht. My mom has always told me I'm quite charming, real people person, and so yeah, I think we'll have a lot of fun together. But in all seriousness, whether you're closer to level 1 or level 7, it doesn't matter nearly as much as knowing the truth about where you stand. Once you understand your level, you're going to stop comparing yourself to everyone else, and you start planning the retirement that actually fits your financial reality. So that wraps up the 7 levels of wealth in retirement, and hopefully this gave you a clearer sense of how wide the spectrum really is and why comparing yourself to other people is almost always useless. Everybody's number tells a different story, and once you understand your own, the planning gets a whole lot easier. And as I mentioned earlier, if you want real clarity on how your level of wealth fits into your retirement and what it means for your taxes and income and withdrawal strategy and all of that good stuff, click the link in the description. You'll answer a few quick questions and I'll review your information. And then if you want to speak, I can show you the areas that matter most to your plan. Thanks for watching, and I'll see you in the next one.